Good morning, traders. Richard here and quick Ichimoku cloud chart market review of the Nasdaq 100 E-mini futures contract. In the last update, we were right here at the cloud chart resistance. Looking back at this key resistance zone, we managed to break through that. Then the upside target was the bottom end of the cloud. Here you can see this 21,550, and we got to that cloud chart level. The next resistance zone is 21,766 there. Now, we've had a tremendous strong rally now since rebounding from this cluster of cloud chart support zones here. Now the question is, there's downside consolidation risk towards the turning line of the Ichimoku cloud, as well as the standard line and the top end of the front end of the cloud. So these are the new support levels to watch out for. If this resistance zone holds, we could see a downside consolidation risk to the standard line, which should by this time flatten out at this 2941 old resistance zone. Is going to be tested for new support. And if that support fails, by that time the standard line also on top of the front end of the cloud is also a major support zone for the next couple of months. So keep an eye on these downside risk targets. We could see a consolidation, a Fibonacci retracement, a 23.6 retracement of this move brings us back down to a little bit below the turning line of the cloud. But interestingly, 38% Fibonacci retracement is spot on there with the standard line of the Ichimoku cloud. So those are the downside risk targets if this resistance holds. If we break past the resistance, then we're going to look at these old highs in the top end of the front end of the cloud as the next upside targets, and the old highs there. But so far, strong rebound rally, but there's some consolidation risk back down to the turning line of the cloud and then the standard line of the Ichimoku cloud. So keep a close eye on a breakout past this resistance. If this resistance holds, then we could snap back down to test those critical support zones. Turning to the weekly, we can see we're now roughly at the bottom end of a major support zone. That entire range there of December, January and February, we're now digging into that old support zone. You can see the length of the wicks there gave us an idea that was a huge support zone back then. And now we're digging into that as a new resistance zone. And these are the upside targets, 21.7, 21.9, and then the downside risk, as we now highlighted on the daily, but also that coincides well with the top end of the front end of the cloud. And if that support fails, then we're back down here at 23.22 to test the bottom end of the cloud. But so far, as long as we stay above the top end of the cloud, this rally should be okay. Let's take a quick look at the 4-hour Ichimoku. You can see there how that resistance level is holding there for now, and now we're going to retest the turning line and standard line flatlining there, as well as the top end of the front end of the cloud. Keep an eye out on that support zone there. It is possible that we could see a dip back down to rebound from this top end cloud chart support, so that's the downside risk on the 4-hour Ichimoku. But back to the daily, keep an eye on for that resistance level. If it holds up for now, then there's downside risk towards the first stop would be the old resistance zone there, that's new support, and then the turning line of the cloud. And if that fails, then we're going to hit the 23% Fibonacci retracement, or even go down to the 38% and the top end of the front end of the cloud. So there's still some significant downside risk in this rally, but keep an eye out for a breakout pass here. If the resistance holds, then we're going back down to retest these old cloud chart levels. Until next time, happy cloud chart trading. Bye for now.